Hello, everybody, and welcome to the Loan Officer Wealth Podcast. I am blessed to be here with Emmanuel St-Germain. Emmanuel, thank you for being on the show.
Thank you for having me, Chris. Excited to be here.
So am I. We have got a topic that I don't think I've ever heard anybody discuss before, and it's a brand new revolutionary model that you're bringing to the mortgage industry. So I'm really excited to talk about it. So thanks again for being willing to share.
Awesome. Absolutely.
Cool. So before we get into the actual content and this brand new model, could you give us a little bit of your background, how long you've been in the mortgage industry, what your business look like now? Just give us kind of that rundown.
Sure. So I've been in mortgage industry since about 2005. Originally born in Montreal in your home country, and grew up about an hour northeast of Boston in Maine. And I grew up with my dad's in the mortgage industry. And the reason I decided I wanted to become in this industry is I love the flexibility of his work schedule. There wasn't a ball game that he didn't, that he wasn't able to come to because he was a doctor, a lawyer, or whatever. So the flexibility has been fantastic. And so when I moved down here in 2005, that's when I got in the industry. And then we essentially have been in business with the same team since 2008. So we've moved the needle quite a bit, and very excited. And we've come up with what I think is a revolutionary, fantastic idea. And I'm excited to share it with you guys today.
Awesome. Right on. Well, let's get right into it. So unpack the big idea from like 30,000 feet. How are you growing the mortgage business well, I'll let you take it from here.
All right. Well, so the basic concept, the idea started with that, in the financial world, our CPA brethren and financial advisor brethren, when they are going to retire, they have a book of business, it's called. And essentially, they're able to get to monetize that book of business simply by getting an upfront fee. And sometimes they're asked to stay on for 1 year to more or less get the handoff to make sure. Now, the reason that's successful is that those types of industries are residual based. So, for example, a CPA, we don't want to change CPAs in general, right? Business owners, especially, the more tax returns you have, the more complicated it is. The last thing you want to do is start fresh with someone. So people just need a reason not to leave. So the idea with the person staying on board, they make the handoff. Oh, by the way, Chris is now your CPA is going to be handling your stuff. Okay, great. So it's an easy handoff. Well, the problem with the loan officer is that he doesn't have anything that's of value for a one-time fee. So what is a loan officer's value, right? So when we're recruiting a loan officer, we're looking at we're looking at their database. How big is your database? But that being said, we're coming out of a marketplace where everyone's database, in theory, should have refinanced to rates that are in the 2s and 3s. So it's not like there's a ton of value immediately in that database. Then the second thing is going to be the referral partners. Well, referral partners, it's not that I can buy your book of business and all of a sudden, your realtor Joan is going to start giving me their loans. So we had to try and come up with a system to try and figure out how can we monetize and how can we create an annuity for life for a loan officer. And that's what we did. We came up with a system where if an individual is looking to retire in 2 to 5 years, that is the kind of individual that we want to partner with one of our already experienced loan officers. And I think that's a big key to this. It's not just about putting two people together who aren't going to have a relationship. You need two individuals who are, because whenever you sell a business, yes, there's money involved, but there's a lot of pride. And the individuals who are 60 to, 80 years old that are still in the mortgage industry, they have a lot of pride. Technology isn't what they've been using as much. So for them, it's very relationship driven. And the last thing they want to do is for you to hand down their business to some individual who is not quote unquote worthy. So that's why we've decided that the key to the success on this is truly the handoff. And the handoff is pairing the two individuals together. And you have a 2-year period where we're going to work side by side doing some direct marketing things, some direct database follow-up, working the same referral partners as a team. And when you marry the two and when you put the individuals as a team, first and foremost, we're going to make sure that they have a relationship. right? Because if the senior doesn't like the junior, doesn't like the way that they communicate to their clients, well, that's not a right fit. And that's the idea
Yeah.
behind where it's not just about giving them any old junior loan officer, which is what most companies are going to want to do because they can pay that junior loan officer substantially less. So from the
Yep.
business owner's standpoint, they're going to say, okay, well, Chris, if I'm going to guarantee you 30 to 50 bips for the rest of your life, right? I mean, can you imagine playing golf, doing the things you want to do? You're down there surfing in Costa Rica, having a grand old time, which is awesome. And imagine just making money. I mean, this is very similar to what your business is doing, which is fantastic. And I love it. But for us, there really, as a loan officer, there's not a lot of ways for us to capitalize on the relationships. We work so hard to develop the relationships that we have, our reputation, and there was no way to monetize it. So we're super, super excited to come up with this formula, and we think that it's gonna be a real game changer in the industry.
That is amazing. So you're going out to existing mortgage professionals that have a business, have a great career, they're looking to exit in 2 to 5 years. They come to you and you're not paying them a one-time fee in order to take their book of business. You're setting up a partnership where you're paying them an annuity for life off of the business that you're able to generate from their database, their referral partners, their entire book of business. Is that right?
Exactly. It's exactly it. We're going to guarantee them. All they have to do is they have to maintain their license. So as long as you maintain your license and hang your license with our company, I will on all first tier, right? So everything that comes in from your direct relationships. Now the incentive for the junior loan officer, and I'm going to call the junior loan officer just in terms of an age standpoint, but they are still a senior loan officer the way we would call ourselves once you've done a certain amount of business. But the junior loan officer for that term, that individual, now part of their incentive, because they're certainly not going to make as much as they would on their own self-sourced business, right? This is going to be company-driven data. And then along with that, the key for them is the second tier referrals that they get. So when I'm dealing with Realtor Bob, who was one of the senior LO's realtors, that's a direct revenue stream for the senior LO. But when we do an amazing job and Realtor Bob introduces me to Realtor Joan, now Realtor Joan is first tier for me, the junior LO. So we've created an incentive for the junior LO to really want to work the relationships and continue to honor the senior LO and all the hard work that they've done to build that and develop that reputation.
That makes total sense. And so the benefit to a junior loan officer is you walk in and you've got an immediate asset that you get to leverage. You've got a database you get to call. You've got realtor partners you're going to be introduced to. You've got a nice warm flow of business where if you follow the systems and you do it right, you're able to step in. You're making less commissions, but you're busy all the time and you've got business to work.
Right. So we're looking for that. The junior LO for me is defined by somebody who's doing 3 to 6 loans a month already on their own. So you have to have a self-sustaining book of business on your own, because otherwise you're not going to, in order for us to give you something additional, I need you to earn something on your own. And same thing. And then what's also going to happen is that's also how you get the respect of the senior LO who's been doing this for a really long time. They know that you're capable, you're self-sustaining, and you're self-driven.
Yeah, that makes total sense. And they're excited to get into the partnership and to move it forward. Now, okay, so I know so many people in business in general, but specifically in the mortgage business that think about, okay, I would love to grow through acquisition, let's call it. And somebody's going to give me a book of 300 past customers and 10 realtor relationships. And all of a sudden their head explodes because they can't handle the database that they've got right now. And they're struggling just to keep up with all of the maintenance of the existing referral partners that they have. So I think there's a tremendous value for our listeners here in the systems that you have in place in your mortgage business to be able to take a huge acquisition like that and seamlessly transition it into business. So when you look at, okay, I have this asset of a senior loan officer that's going to come in. What is your plan for what your marketing is going to look like, for how you're going to make sure that that senior loan officer gets that dividend, they're happy with it? What's your marketing process that you know is going to work?
So, I mean, I think it's a great question. I think that, and it's really the crutch to all of it is to basically say, this is what's making us successful today. This is why we are converting our existing database at such a high percentage compared to our competition. So by doing the simple activities that we are currently doing, we are now going to do that with you. Now, I'm willing to bet that 99% of our competition doesn't do this, whether that their companies don't have it or the loan officers simply don't have the tools, experience, whatever it may be. You know, for us, we do a monthly mailer that goes out to our entire closed database. It is handwritten. The envelope is 100% handwritten here in our office. You take that and you couple it with quarterly phone calls. You have to call. So for us, we do it on Wednesdays, database Wednesdays. We are calling every single one of our clients at least 3 to 4 times per year. Those phone calls, not only do we ask for referrals, right? Are you looking to buy, sell, or refinance? Do you know anyone? Can I count on you? And you ask in a really cool way, right? I tell agents this all the time, you know, hey, Chris, can I count on you if you run into someone who's looking to buy, sell, or refinance, that you'll give them my name? And of course, everyone says yes, because I'm not asking you for a name and number right then and there. So if you do it in a cool way, it's super easy. And then what happens is, because we're calling every single time, I'm not calling just a chit chat. I'm going to call with an added value so that they have an understanding that I am a greater resource to them than just some finance guy who's going to help them every 5 to 7 years whenever they decide to buy a house or when the rates come back down and it's time to refinance. So we're calling based to add value on, hey, so for example, my home base is here in Florida, and in order for you to get your homestead, you've got to get it done by March 1st, your application for anybody who bought a house last year as their primary residence. So that's a perfect value add call. Just wanted to make sure everything's going well. Have you filled out your application? Do you know what you need? Can I help you with that? Oh, by the way, while I've got you on the phone, can I ask you for a favor? You know, and then you go into your pitch. And then again, same thing, like that's the whole part that as we're meeting these new referral partners, right? As this senior loan officer, we're going to work in tandem with the senior loan officer and let those agents know that we plan on not only during the process of the loan, but every single quarter that we're calling our shared closed database, that we're going to be asking them for referrals so we can give them back to them, so we can help them find more buyers, because we believe in reciprocity in a relationship, not just a take. So I think that's the key. The point is you got to have your own systems ready to go, your marketing stuff, and that's what will make it successful. And that's why I don't mind sharing what my ideas are, because I know that even with the recipe to it, most people won't do it. They won't put in the work.
Yep. Yeah, that is so true. And so you mentioned having a reason and a value add to call the database. And I think so many people miss that critical point. They think, okay, I'm just going to call my database and ask for the business. But having a reason to call in advance of asking for the testimonial. And we've had some other incredible guests on the podcast, and one of them does a really good job of what I call the hub and spoke. And basically, you've got all of the referral partners that you're working with. You've got an accountant, you've got financial planners, you've got insurance advisors. And they almost have like a themed month where they're calling out to the database and saying, hey, do you have any questions about your insurance? Have you potentially looked at, bundling home and auto and see if you can save money? We're happy to introduce you to our partner. So it's a way for them to give a value add, generate a referral for another type of referral partner, not just a real estate agent, but also at the same time, give the ask of, and can I count on you? So are you doing any of that and adding in other referral partners, or is it always just you're looking for something that's happening in the market at that time?
No, I think if I recall, it used to be called page 5 at the 1003. And yes, as you're taking so I'm an old school, basically my pitch is very simple. Now, we certainly use an online application, and I allow anyone to use the online application that they need to, just as long as you do a buyer consult afterwards. But I'm old school, and my pitch would simply be, hey, Chris, I've got an online application. If that's the way you prefer to do business, I'm happy to send it to you. I personally prefer to have a conversation with you, because if any red flags pop up during our conversation, we're going to address them right now. So where the rest of the industry tends to be very reactive, I'm much more proactive. And proactive for me in my entire business model and every system and process that we have for the rest of the, for the entire loan process is all about being proactive and touching base. So for me, as I'm having that conversation, as I'm asking you the questions that turn into what's called an application, right? We're talking about, all right, what do you do for a living? You're self-employed, Chris. Oh, awesome. You must have a fantastic CPA. Yeah, I really do. Or no, I do my own taxes. Okay, great. Note to self, he doesn't have a CPA. All right, let's talk about your assets. What do we have for assets? Where's the money coming from to purchase this house? And you're able to derive that this person, whether or not, okay, do you have a financial advisor that's doing all this for you? No, okay, great. Or you do, awesome. I'm always looking to connect with really amazing financial advisors. When we're all done, would it be cool if you give me their name and number? They all say yes, right? And you do the same thing. Are you planning on putting this property in a trust, or are you going to put this in your names? Oh, I don't know the difference. Not a problem. I'll make an introduction at some point before we're all done to a trust attorney, so you can to an estate attorney, so you can discuss all the benefits and what makes most sense. So yes, I love that. It's a fantastic way to increase your ability to give referrals. And obviously, if you believe it all in givers gain, the ability to send referrals out to people before they call you is one of the amazing ways to grow your database and through your referral networks as well.
That is amazing. And so are you also implementing that strategy with the new loan, let's call them junior loan officers that are, technically senior loan officers?
Sure.
Are you making sure that they're following those processes every day in the business?
So the system itself is all derived. So what we do is that my business partner and I derived everything through our CRM. So as a salesperson, right? A true salesperson, and that's what a loan originator is. You really don't, people ask me, what's your LOS? Why do you care? You're a loan officer. Your job is to sell. Your job is to take notes. Your job is to say, Chris is down in Costa Rica surfing. Okay, awesome. Make mental notes, put that in there. So next time when we talk 3 months from now, I could say, hey, how was your trip? How was it? That's the purpose of a CRM. It's to create a connection with someone. The automation is going to happen. And so we've got all of the automation already set up in order to do the things. But yes, you have to do the tasks that are in there. So what we've done is, I'll give you a little example. So we have an email that gets sent to you, and which is also a task within our CRM that simply says after 4 days, hey, call, this is a post-close borrower thank you call. And here's some talking points. And remember, at the very end, this is your opportunity. You're really asking for referrals. And we do the same thing, 7 days post-close. Now you're calling the referring partner, right? Hey, thank you so much, John. It was amazing working with you. We absolutely love working with you. We can't wait to work with you again. By the way, is there anyone that you're currently, out looking at homes with that I might be able to assist? So systems are really easy. And processes are really easy when they're already set in place for you. And I think that that's what we've tried to do. And our CRM is, we've been building this thing for 5 years. And my business partner, Jared, is the one that handles all that. Thank God. So I'm an idea person. He makes it all work. So it works well. But we need to incorporate your stuff in there too. So
right on. Well, always room for improvement, but you are killing it as far as systems go. So congratulations with that. Now, thank you for being so generous with your time. If there's loan officers out there that are interested in the model, as far as, somebody who's potentially looking to exit, or somebody who's looking for, a great organization to join that already has systems in place for them to plug into, how do people find you? Where do people go to get more information?
yeah, so I'll give you my cell phone number. That's, my business model, unlike many other people's, is relationship based. And if you're not, I don't like that concept of having a number that goes in somewhere and 500 different people answer. So for me, when I'm dealing with something that is of this type of magnitude, and these types of conversations tend to be confidential as well. If you're working for a different organization, you don't want to get the ring around. So for this particular subject matter, I would gladly give my cell phone number, which is 561-400-7317. My email is eSt-Germain@choicemortgage.com. And you can follow us on Choice Mortgage Group is on our social media as well. So
that is amazing. And all of that information will be in the show notes. Emmanuel, thank you so much for being with us here today and for sharing. That's incredible.
Thank you very much. It's my pleasure. And thank you very much for the opportunity. This was really great.